Welcome back to another episode of the Anatomy of the Trade. A lot of you guys commented on the tape reading episode and just a lot of tape reading stuff that is coming out of Wyckoff Analytics right now. Currently, as we are in the almost middle of the tape reading course with multiple teachers. So thank you for all of your comments. And today we're going to continue with that theme a little bit more. And we're going to talk tape reading for intraday trades. Lately, I've been intraday trading a lot. So just want to show you some other trades that were done and also a little bit discuss the market, what we're seeing in the market specifically, with this tape reading technique. So 3 trades that we're going to discuss today. And as always, Franz is with us. So we're going to go through our usual analysis, execution, and then post-analysis variance. So this is the first trade. This is probably the most frustrating trade that I'm going to show you just because the analysis was, again, so spot on. And again, I'm not really a day trader per se. I'm just day trading when I see an opportunity and when I'm available. And this availability is really crucial to me, whether I can or cannot be there. So as you could see, I had no trades during the morning. I was just busy with other stuff. But once the setup was there, that was the point of entry. So let's just talk first about the analysis itself. What do we see here? Well, overnight action has attempts to go down and everything is holding up. So even on some increase of the effort, the price actually stays up and then a very good rally into the open of the US session suggests some strength and suggests that we're going to have a favorable bullish day where we could see the price holding around the support. So that support extends and the nature of the next decline definitely has a lot of short-term bearish characteristics, but at the same time, again, the stop in action is in the area of where the stops has happened before. So from the tape reading point of view, when we look at the swing analysis, it just tells us that volatility is still there. There's going to be some kind of potential retest in the future of the same area, and that volatility needs to wind down. But because of that sign of strength at the beginning and the way how the overnight action was holding, then we're probably gonna have a more of the bullish bias for the day. So all of the trades should be in the direction of that bias. And again, just going into the actual setup and looking at the next reaction. And this is actually something that we were covering last Thursday in the tape reading class. How do you look at the reactions? How do you compare them? And if you compare reaction number 1 to number 2 has that textural characteristics of the diminished bearishness. So this is where volatility goes down. This is where this downward spread is starting to diminish. This is where we are having a smaller result, so downward swing is decreasing in size. And we're seeing also volume characteristics diminish and therefore supply diminishing as well. And we're going into the high-low. So that just basically tells you that such texture is a prerequisite for the next move up that could potentially overcome, the resistance cluster that is ahead. So from that, we just really quickly identifying the climactic action. The analysis was that we are going to have some kind of reaction, but this will be the lowest low and this will be the highest low. So position was opened with an idea that we're going to experience that high low possibility to add here, if we're playing multiple units. And that's the point of entry. So I have no kind of like any judgment about the point of entry. I thought that was actually okay. The stop loss was below here, so there was plenty of room for the risk to run its course. And then once we are in the established trend right here, one thing that I'm noticing, and I'm kind of like trading and on the background as I'm doing other things. noticing how momentum starts to diminish, deteriorate. We're seeing shortening of the thrust. We're seeing that the texture starts to change. We're seeing that this is more of the uptrend in trading range where momentum is not there. So usually in those type of the scenarios, we would expect some kind of reaction. We would expect reaction into the body where momentum was still high. So this was the line right here, and obviously support that acted before as the resistance. And unfortunately, just being a little bit distracted, I'm putting the stop loss right here. And then almost on the last tick, it gets me out, even though the analysis shows that the target actually was somewhere here between 1900 and 1940. So a very unfortunate mistake, execution mistake that leads to the exit, premature exit, and we're not enjoying the rest. The next mistake, obviously, is just not getting in, but I'm already busy with some other stuff. So, Franz, just looking at that, I would say just incorrect stop loss movement, some distractions around this trade. But what are your thoughts and comments on this trade? And specifically, the analysis and tape reading here.
Great. Well, Roman, first of all, I feel your pain. But I think it's just a textbook case of tape reading, talking about, okay, we're coming into the open. We immediately see that we've got a strong move, and that sets the character for the day. So that's your first conclusion. The reaction, you immediately notice that there's a lot of volatility in it. It comes down, and you're saying, okay, I mean, I'm putting all this in my own mental filing cabinet because this is such good stuff. You're saying, okay, this is going to be tested, and I'm definitely not ready to go through that test. So along comes the test, and all of a sudden now you've got this swing comparison opportunity that you've been teaching us in this great tape reading course that you're doing, which you're using it just like you tell us to do. All the characteristics of this test indicate that now is when I really want to have my antenna out for the opening opportunity. You get that little that entry point is great. The reaction that you expect happens, and it's at a higher low, which is exactly what you're expecting. And then, you're reading this move correctly as well. You're seeing this decline in momentum, and you're seeing this as an opportunity to raise your stop, and just a slight miscalculation. I mean, ideally, what would you say that significant bar that you've kind of got the arrow going through, maybe the halfway point of that, or the bottom of it?
This is where momentum is still strong, so they are buying through this area. So therefore, if the price would go there, which it did, right on the top right here, so it's gonna get some value there, and this demand is gonna come and start pushing the price up, and which exactly happened. So it's just being distracted and not looking into the decomposition of the swing, and therefore the stop loss was placed incorrectly. And you could definitely use more conventional techniques, just support and resistance, and I would urge you guys to do that. It's just my eye is trained in a slightly different way, so I'm just looking at slightly different ways of how the stop loss could be placed. And obviously, if you stayed in this position, what would be the exit? So something after this momentum, where again there is some deterioration, probably this bar right here as a climactic bar. So a point of exit right here would be probably the most opportunistic, and the most efficient in terms of where we get out. All right, well, let's go to the next trade. So we are going day by day. So this was on the 15th. For those of you, who are day traders, you recognize the structure. And by the way, we didn't go through the post analysis. So the bias is yes, timing is yes, character is yes, point of entry is yes, stop loss movement, no, and exit, no, so 67%. All right, well, let's hope that the next trade is going to be better. Okay, so we are entering in the last, 5-10 days, we are in the bearish environment for day traders, right? So it's kind of like this gradual move down. So you have to trade from two perspectives. You have to trade the trend to the downside. So any type of, failures that you see, those are going to be your point of entries in terms of the um, trend itself. And then you're going to have counter trades. And those counter trades are going to be still important for your P&L because there's going to be at least one movement or two movements per day where you're going to have attempts to rally against the main bearish trade. So this trade is a counter trade to the main trend, and therefore the parameters for exit, parameters for how you behave in this trade are going to be slightly different, and you have to recognize that. So what was happening here? Again, I'm not available, probably until like 9 Pacific, and this is usually where my trades, start to happen. So a counter trend here is caught, but the entry is definitely too early. And this is just one of the mistakes that I do consistently. I start seeing bullish behaviors faster or earlier in the trading range than the actual point of entry that is more optimal here. So the point of entry here would be either this bar or this bar right here, and that would be a much more efficient entry. And then the exit was just also based a little bit on life, I had to go away, so I wanted to get out of the position on some kind of strength. We are overcoming the resistance here into the upthrust, and we are in the middle of the area of where some selling, has taken place. So therefore, this is a logical place, but it just happened to be that it coincided with me just going away from trading for the day, so I just wanted to close out the position. So Franz, if we would go through the post analysis, I'd say bias is yes. There is a recognition of the counter trend trade, timing 50-50, so it seems like we are in the correct area, but we definitely would want to improve that. Character, yes, we understand that there's going to be some laborious movements to the upside. Point of entry, again, could have been improved. Stop loss, okay, and exit, yes. So some improvement on the variance, 83 now. And I'm just saying that point of entry could have been better. And then again, some distractions around this trade. Franz, what are your thoughts on this trade?
Counter trend trades are more difficult than going with the trend. So kudos for seeing this develop. I guess I've just got one question for you as far as the tape reading. You got in after the reaction that had that big significant bar, and then you started to see some sort of a recovery, at which point you got in. Could there have been some kind of possibly swing analysis that I might see or that our viewers might see that might we might be able to put in our database to recognize that this might be a little bit early? I mean, how would you evaluate that?
Yeah, I probably should have done this slightly better. Why? Because, I mean, it's all there. Judge the market by its own actions. So we already know what's going to happen just by looking at what has preceded this. This was a very important bar. So not just, overcoming this and touching it, but actually committing above it. So if I would have some kind of stop buy somewhere slightly above, I wouldn't get in. But do we have a commitment here? We don't. So we're just impatient here on the entry, anticipating that that commitment will happen, and it didn't. So tactically, that was a mistake. Also, just looking at the way how demand functions. So demand comes in on this downward bar. That's number one. Then demand increases and pushes the price up. So there is some kind of synchronicity. And then demand just diminishes. So this diminishment of the demand suggests that we might have some kind of reaction first. And then the question here is reaction to what? To probably as a test to the previous reaction that had that also increase of the supply. So it's the supply that we're testing. And then obviously if you would wait, then probably somewhere here in this area, this will be still a short-term bullish read and also a much better point of entry. So again, just doing a lot of things at the same time and obviously not doing the proper analysis at that time. And that happens. I mean, like guys, life takes precedent and, you do your best. So uh, that's what it is.
Sure. Well, thanks for showing it because, we all learn from our mistakes. So, yeah.
Okay, let's look at another trade. So this one was better. It has more bullish kind of a background for that particular day. This was on the 20th, which was on Tuesday. And as you could see, the variance is 100. I mean, this is kind of like a rare trade where I would say like, yeah, it's not that perfect. The point of entry could have been better. The point of exit could have been better. And I'm nitpicking here because that's what I want to do with my trade. And I want to uh, always be in the chase and pursuit of a perfect trade. That's just me, and if you guys are having thoughts like, oh, okay, well, why put so much pressure on yourself and so on and so forth, again, you do you, I'll do myself, that's how my daughter would say. And I'm gonna nitpick on those type of things. So here is our loss commitment to the downside. Actually, the entry was somewhat close, so I can't really nitpick too much here, but could have been a little bit earlier, could have been, on more recognition, and then demand is coming in this area. And then the exit was based more on how momentum is traveling. So here's the increase of the momentum going into the resistance here. And because it overcomes this resistance and then the test takes place in a bullish manner, we're thinking about the continuation, and we're thinking that this continuation will have deterioration of the momentum. So you want to catch before the reaction, you want to catch that deterioration. So you need to deconstruct the swing, the last swing. So if we look at this, there is still some momentum here, still some momentum here. And this is where momentum starts to deteriorate. There is no big push. And plus it goes into our target zone, which is defined here by two red lines. And we just basically on this deterioration saying, okay, well, we're just going to get out, on any type of reversal or potential reversal. And it just kind of happens this way. A better exit would be on the climactic bar and on the change of behavior bar. And that would be more optimal exit here, from tape reading point of view. So and that would be even perfect trade. This is just a good perfect trade, but could have been better. So Franz, your thoughts?
Well, Romanos, I look at this, it's a little bit more of a trending move than the other two.
Yeah.
So you're more, it's not so much managing. I mean, you're obviously your entry is coming out of a trading range, but I really like the way that you manage the trend and reading the momentum characteristics and seeing when the trend is starting to, run out of gas, so to speak. So that would be my observation here is just,
Yeah. And obviously,
job.
there are quite a few trades here on this chart. I mean, if I would be thinking in terms of the high probability trades, I think that you have a trade here on the at the open. Here is one trade, which is a high probability trade. I think that you have another trade right here to the downside, which is also a high probability trade. this was a high probability trade, and then a high probability trade somewhere here where you exit to the downside and you're going into the previous target. So there are quite a few trades throughout this day. The range is actually permitting you to have quite a profitable trade. You have to be available. Obviously, you have to also analyze correctly, and to make sure that you understand going back and forth like this. What are you accomplishing here in this day, in terms of trending trades and counter to the trend trades. And then obviously adjust your targets, adjust your understanding of how continuation of those trades happen, and where you should be getting out. All right. Well, hopefully this was a useful episode, even if you are not an intraday trader, if you're a swing and long-term campaigner. Doesn't matter. Tape reading is tape reading, so you still have to actually do quite a lot of analysis before you start executing. So you kind of could see that analytical layer is quite big, but the more you practice, the better you become in the analysis. And one of the things that we obviously want to suggest is, if you're still not taking the tape reading course, this is the time to do so. We're still in the live sessions before it goes on demand. So therefore, so much ahead. Gary Fullett next week. David Weiss is going to come in 2 weeks, and this is just a heavyweight in the tape reading world. And then William Brereton, is going to conclude the whole series for us. So go to our website, sign up, and I'm looking forward to working with you. Franz, your final thoughts?
I really like what you said about whether you're an intraday trader or whether you're a campaign type or even a swing trader. It doesn't really matter. When you look at the way the chart plays out on any time frame, it's giving you, it's telling you, judge me by my own actions.
Absolutely. Well, with that, we're going to conclude this episode. Thank you guys for watching, and we'll see you next week.
Thanks, Ramon.
Thank you.